Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions, and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Kobe's city government banned brand new tower condos in its own downtown. Developers wanted to build them, buyers wanted to live in them, the city said no anyway. The real reason has nothing to do with views or traffic. Third stop in our City by City series. Kyoto was a scarcity play built on heritage law, Yokohama was a Bay Area alternative built on brand. Kobe is something else entirely, a city planning for its own shrinkage. This is for anyone weighing an older high-rise unit against a smaller studio here, or just trying to understand why a coastal city with real charm keeps getting overlooked next to Osaka. Kobe has been an international port city since it opened to foreign trade, with a genuinely walkable, hillside, harbor view layout squeezed between the Rokko Mountains and the sea that's rare anywhere in Japan. It's also consistently cheaper than Osaka for comparable property, sits just 20 to 30 minutes away by train, and puts Kyoto and Nara within easy day trip range, a genuine alternative for anyone who wants Kansai's culture and job market without Osaka's price tag. Since July 2020, the city has banned new residential construction entirely across 22.6 hectares south of JR Sannomiya Station, the most central, most in-demand land in the entire city. Not just towers, any new housing at all, on some of the most transit-connected land in the Kansai region. A wider 292-hectare zone, stretching from Shin-Kobe Station to Kobe Station, caps the residential floor area ratio on large lots at 400%, down from 900%. That single change makes a new tower mathematically impossible to build there. It's worth understanding just how valuable that banned land is. Sannomiya is Kobe's central transit hub, where JR, Hanshin, Hankyu, the subway, and the port liner all converge, surrounded by shopping arcades, nightlife, and office towers, exactly the kind of location where developers everywhere else in Japan would be racing to build as high as the law allows. Kobe is only the second city in the country to pass a rule like this. Yokohama, the city we covered last time, was first, back in 2006. So why turn away exactly the kind of development every other shrinking city is begging for? The mayor's own answer is the part almost nobody expects. Kobe's population peaked in 2011 at roughly 1,540,000. It's been falling ever since, dropping below 1.5 million by October 2023. The mayor has said directly that a return to population growth is essentially off the table. His fear isn't too few towers, it's a downtown eventually filled with aging residents in aging towers, while the suburbs empty out around them. For an investor, the practical effect is the same logic we saw in Kyoto. New central supply is capped by policy, not by land availability, which structurally protects the value of what already exists there, with one key difference. Kyoto's cap comes from protecting heritage views, Kobe's comes from managing decline, which is a very different long-term bet to underwrite. In Chuo Ward, Kobe's core, the average sale price now runs about 46.75 million yen, or roughly 670,000 yen per square meter. That's up 51.2% over the past 9 years in Chuo Ward alone, with neighboring Hyogo Ward close behind at plus 50.6%. The pace has actually accelerated recently. Existing condos gained 9% in a single year, while new build pricing jumped 42.5%, among the fastest growth of any major Japanese city that year. On the smaller end, studio investment units now average 17.23 million yen, an all-time high for the segment. That price growth has a direct cost. Gross yield on those same studios has fallen to about 5.14%, and it keeps compressing as prices climb faster than rents. A cash flow buyer chasing yield alone is fighting the same scarcity effect that makes the asset attractive in the first place. Against Osaka, Kobe still holds a real discount, roughly 2 million yen cheaper for a comparable new build unit, and about 1.7 million yen cheaper for a similar resale property near the station. But the tower ban story isn't finished. The city is now looking at what happens decades from now to the towers that already exist here. As of January 2026, an expert panel has proposed a new tax specifically targeting vacant units inside existing tower condos, aimed at owners who leave units empty long-term, out of concern that unmaintained vacant units accelerate a building's physical decline for every other resident. This hasn't been written into law yet. But it tells you exactly where City Hall's attention is, preventing exactly the kind of slow-motion abandonment the tower ban was designed to avoid in the first place. If you're buying an existing tower unit purely to hold vacant as an investment, this is a policy risk worth pricing in before you commit, not after. Financing follows the same pattern as the rest of this series. Residents with steady Japanese income can often reach loan-to-value ratios of 70 to 90%, while non-residents typically need far more cash up front, at rates closer to 1.0 to 2.5%. Kobe's international character isn't recent branding. The port opened to foreign trade in 1868, and the hillside Kitano district still holds dozens of preserved Western-style residences built by that original foreign community. That history still shapes daily life here, an active, long-established foreign resident community, English-friendly clinics and businesses, international schools, and a social scene concentrated around Sannomiya's bars and restaurants that newer, purpose-built international hubs in Japan simply can't replicate. The most common mistake buyers make here is assuming Kobe is just a cheaper, smaller Osaka. It isn't. It's a city that has explicitly chosen scarcity and stability over growth, and that choice shapes every part of the market differently. The second mistake is buying an aging tower unit purely for yield without checking the building's reserve fund and repair plan, the exact scenario City Hall is now trying to tax its way around. If the pace of the last 2 years holds, not guaranteed, but the trends so far, Chuo Ward's trajectory looks a lot like the last 9 years compressed into a much shorter window, scarcity-driven gains concentrated tightly around the protected core, with much softer numbers everywhere outside it. The flip side of that scarcity, a city planning around population decline, is still a city with population decline. Suburban and older, harder to renovate stock outside the protected core faces real long-term demand risk that central Chuo Ward doesn't. Fewer buyers chasing it, slower resales, and rents that may not keep pace even if the building itself is well maintained. Put it together and Kobe rewards buyers who stay close to the protected core. The same policy that frustrates developers is exactly what's holding prices up for everyone who already owns property there, and the further you get from that core, the more this turns into a genuine demographic bet rather than a safe one. Next in this series, we head to a very different kind of Japanese real estate market entirely, full details soon. Kobe didn't ban tower condos to protect views. It banned them because it's planning for fewer people, not more, and that changes what safe actually means here. Subscribe for the rest of this city-by-city real estate series, and for more data-driven breakdowns of living and investing in Japan.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.